When it comes to economics, the black entrepreneur is David, the whites are Goliath. The difference is Goliath has the slingshot. Black man has to keep up with the white man's print press. After the 2008 housing crisis, banks received the $800 billion bailout, which they lavished themselves with bonuses worth hundreds of millions of dollars, sometimes adding to billions. Be clear about this. After that, they received quantitative easing. Quantitative easing is the Federal Reserve injecting money into the economy through giving the banks free money.
With such a strong labor market is not in a recession.
At the center of the debate are the actions of the Federal Reserve, which seems to have our economic fate in its hands.
The Fed is trying to stop inflation, but is the medicine worse than the disease?
Lately, it's been raising interest rates at the fastest pace in decades, trying to tamp down on inflation. But for most of the past decade, the Fed was keeping interest rates incredibly low, trying to stimulate the economy, creating what has been called an age of easy money.
None of us think about this because it's boring, but it's everything. It touches everything.
And those who have been hit the hardest by it.
It's like choosing between your rent and your food.
They do not understand what everybody's going through.
The Fed's easy money experiment traces back to pivotal decisions made over a decade ago, in 2008.
Right now, breaking news here, stocks all around the world are tanking because of
when investors, speculators, and Wall Street bankers nearly brought down the global economy.
Okay, with Wall Street shaken to its very foundation today.
We're in the midst of a serious financial crisis, and the federal government is responding with decisive action.
The Bush administration.
The president and Congress spent hundreds of billions of dollars to restart the economy, but at the center of the rescue effort was the Federal Reserve. Richard Fisher was the head of the Fed's bank in Dallas at the time.
What the Federal Reserve does is provide the blood supply for the body of our capitalist economy. And what happened in 2008 is all the veins in the capillaries and the arteries collapsed. So every financial function had failed. It had collapsed, and we had to restore them.
We're at the precipice of the apocalypse.
We're on the edge of the abyss.
We are in the most serious financial crisis in generations.
There was nothing but panic yesterday. There's been panic all week.
The bottom to America's financial woes appear nowhere in sight.
The banks are still not lending to one another, and as long as that's not happening, the system remains stuck and imperiled.
What about the access of lending to
In
the
normal
black
times,
community?
the Fed's job is to promote employment and keep inflation in check, primarily by raising and lowering short-term interest rates, making borrowing cheaper or more expensive. But amid the crisis, Fed officials decided to do something they hadn't done in half a century. They began dropping rates, eventually to almost zero.
Those massive rate cuts have not been stimulating the economy, so it's the other.
With Americans still suffering and the banking system on the verge of collapse, Fed officials there at the time told me they felt compelled to go even further.
And then the question was, what else can we do? And the committee came up with the idea of quantitative easing.
Quantitative easing. What in the world is that? Quantitative easing. That's just a Greek term to a lot of people. And a lot of people want to know what they're going to say about what we call quantitative.
This is how white people gained all their wealth.
Was championed by Ben Bernanke, then the Fed chairman.
The Federal Reserve is committed to using all available tools to stimulate economic activity and to improve financial market functioning.
QE was an experimental way for the Fed to inject money into the financial system and lower long-term interest rates.
It's almost like alchemy. You can create money out of thin air if you're at the central bank. So creating more money puts more money in the banking system, put more money out there for the economy to take it and put it to work and to grow and to restore itself.
But they did not put that money in the black community.
So we're doing everything we can to support the economy, and we hope that that's going to, get us going next year sometime.
Their hope was that the new money would help shore up the failing banks and get them lending again. It would become the heart of their easy money policies.
It was an emergency measure. I mean, the economy was imploding. I mean, no one would lend to anyone. There was no ability to borrow. The economy was going to be stopped dead.
Thomas Honig was the president of the Kansas City Fed and initially supported the quantitative easing plan.
These are trying times, and as you just heard, there is much to be done as we try and work through this financial crisis. Yes, we need to provide this money on the expectation that once we got through the crisis, we would go back to a more normal policy.
Again, you can tell me if I'm giving too long answers or what have you.
The task of managing most of the program went to Andrew Huszar, a former Fed official who was then working on Wall Street.
I realized very quickly what I was being asked. I was being asked if I would manage the largest financial markets intervention by government in world history.
The Fed
But they only intervened to save white America. Black America has been continuously allowed to collapse. In fact, the United States government current policy that they're pursuing to raise interest rates is meant to create a greater collapse in the black community. It's meant to raise the amount of money, to raise the cost of spending. It's meant to raise the amount of money that banks charge to loan each other. It's meant to raise the amount of money businesses have access to in order to promote layoffs, in order to starve black people out so that white people can afford cheaper products. This is the objective of them raising interest rates during a time of inflation. This is why it's necessary for black people to take control of their own economics. Obama was in office and the Federal Reserve was creating this easy money for banks and lending institutions to loan to other businesses. This is what black businesses was going through. Banks exposed for discriminating against black-owned businesses. Last week, many Chicago Chase Bank branches were closed temporarily as protesters called for racial equity and lending from the nation's largest bank. The practice of denying various services by federal government agencies, local governments, as well as the private sector based on race was outlawed in 1968 and exposed published in early June by a nonprofit newsroom. City Bureau and WBEZ Radio found that out of the $7.5 billion for Chicago home purchasing loan Chase has been approved since 2012, less than 2% was lent to black majority neighborhoods. A federal class action lawsuit alleged that the bank chased out undeserved small business borrowers from the Paycheck Protection Program. See, they denied black businesses from borrowing from the Paycheck Protection Program. Stacey Hawkins Armstrong, an entrepreneur in Westchester, told ABC7 Chicago that she tried to file her PP loan application with Chase Bank, but she got nothing but error messages to keep her employees from payroll. And the business running, she was forced to secure a small loan from another bank. She believed that Chase prioritized its favorite customers and left small businesses like her out in the cold. I myself, a black entrepreneur, was not given PPP loan. Major banks under investigation for discrimination. The U.S. Housing Representative is raising questions on how several banks, including J.P. Morgan, Chase Bank of America, and Citigroup, made PP loans, according to Orange County registers. There are allegations that big banks service big business customers and pushed away undeserved borrowers from the funding pool. According to Events, Sands CEO of Lennox, there are questions about how PP loans are distributed it. As Businesses Wars daily reported early this month, the Small Business Group Administration gave no guidance to lenders to prioritize undeserved communities. About 90% of Black-owned businesses have no employees. Says that PP loan rules required solo proprietors come last. This leaves these entrepreneurs unclear about which loans are available to them. The SBA hasn't received a demographics of who received the PPs, but a survey by Color of Change and Unidos US reports more than half of Blacks and Latino business owners requested loan less than $20,000 in funds, but only 1 in 10 received funding they asked for. Only 10% of legitimate Black businesses received PP loans, while they randomly gave these PP loans out to people in projects and Black people who did not own businesses. This was by design because they knew these people would go out and waste this money, but while they intentionally crippled Black entrepreneurs. We have to understand what Black people are up against. So while the feds was creating this free and easy money and providing it to the banks, they was making sure to deny this same access to Black businesses. Who was given access to this free money that the global economy was built up off of? Because Blacks face racial discrimination in all areas of lending, from auto loans to housing, as well as to businesses. Racial discrimination in the auto loan market. We provide evidence of discrimination in the auto lending, combining credit bureau records which borrows creditors. We provide evidence of discrimination in the auto lending, combining credit bureau records with borrowers' characteristics. We find that Blacks and Hispanic application loans approval rates are 1.5 percentage points lower, even controlling for creditworthiness. Even aggregated discrimination crowds out 80,000 minority loans each year. Results are stronger where racial biases are more prevalent and banking competition is lower. Minority borrowers pay 70 basis point higher interest rates, but default less, 60%. So we're paying 70% higher basis rates on loaning the car, on the auto loans. Think about what auto loans is used for. You need auto loans to do business. If I have to borrow a loan or borrow money to pay for a car in order to do business, I have to pay higher interest rate than a white person. While they're giving all this easy money, we're being charged higher interest in cars.
Reducing inflation is likely to require a sustained period of below-trend growth.
And while ultra-low interest rates for 10 years, all of these things that got built up over the last decade are going to have to be dismantled or changed.
We will keep at it until we're confident the job is done. Thank you.
We lived in a bubble, in a dream, and this dream and a bubble is bursting.
Rising interest rates in the U.S. and many other countries are intensifying fears of a recession.
Ever since that Fed meeting...
Here's the issue. While they're raising interest rate, busting that bubble, Black America never had the opportunity to participate in this easy money system. We never had access to this easy capital. The entire time we've been suffering from predatory lending practices, which these white folks received directly from the government. They received the money from the government basically interest-free and was allowed to charge us interest at predatory rates. So now they're busting the bubble, removing this dream that white people lived in while they have a cushion in order to be able to deal with this, and blacks do not have that because we were not able to participate in this growth. We have to wake up and understand that Europeans continuously get reparations as we speak while they deny this to black people.
The U.S. economy is clearly slowing from the historically high growth rates of 2021.
I think the chair's objective in Jackson Hole was to deliver a very concise message that we know what our job is. Our job is to get inflation back down to 2%. And
stability would mean far greater pain.
His remarks were remarkably brief for a Jackson Hole speech, and that was by design to deliver a very direct message. And I think his message was very effective.
Pain. Some pain ahead.
Pain for American families. What he calls some pay means putting people out of work.
So if currently the goal of raising interest rates is to create more unemployment, then we all know who will be hit the hardest and who will be hit first by that. Blacks are last one hired, first one fired. Let's be clear about what is about to happen and what is being applied to America as far as economics. And this all is occurring during the Biden administration, and it started during Obama. So both times during a Democratic president who blacks overwhelmingly voted for. Blacks have to take control of their own economics. You're competing with these white people printing press.